Hi, it's Lance Edwards with this Apartment Wealth Nugget. I want to share with you about why small apartments are considered the ideal investment. And what I'm doing is I'm taking an extract from my book. This is actually from page 18 of the book, where I explain the attributes of the ideal investment. This is one thing that was taught to me way early on by my first mentor, is that if you take the first initial of the word ideal and use it as an acronym, you find that the ideal investment is comprised of 5 attributes. Number 1, it provides income, depreciation, equity buildup, appreciation, and leverage. So let me quickly explain each of these and how small apartments fits the criteria for the ideal investment. First of all, income. Obviously, apartments are income producing real estate, and one of the main reasons people buy apartments is to get the cash flow. So clearly, they check the box on income. Now, depreciation. You may or may not be familiar with depreciation. Depreciation is a tax benefit afforded us by the IRS, which says when we own real estate, we can actually take a paper loss to reduce our taxes. And depreciation basically means there's a formula we calculate how much the building's value is going down each year on paper. Now, in fact, the building's value is going up each year in reality. But the IRS allows us to take this paper depreciation loss. And it's actually possible to own enough real estate where the amount of depreciation credits you receive will completely offset any taxes you have due on your job income. You could literally pay 0 taxes on your job income if you own enough small apartment buildings. That's depreciation. The third attribute of the ideal investment is equity. And equity is the ability to build up our equity as you pay down your mortgage on the properties that you own. And more specifically, your tenants are paying down your mortgage you own. Because of course, every month your tenants are paying you rent, you're making your mortgage payment from their rent, and you're paying down the balance every single month. So over time, you're building up equity by the fact that you own that building, and those tenants are creating that equity for you. The fourth attribute of the ideal investment is appreciation. Now, we talked about depreciation, appreciation. This is what we all want. And appreciation, of course, means how the value of our buildings go up, and that further increases our equity, and that's where your net worth really takes off. Now, in apartments, there's 2 types of appreciation. There's market appreciation and forced appreciation. Market appreciation simply occurs when market forces are driving up the value of real estate in that particular market. We don't have any control over that, but that's a great thing when it happens. What we do have control over is something called forced appreciation. We can increase the value of our apartment buildings simply by raising the rents and raising the occupancy. It's a fabulous technique for creating wealth. It's my most popular wealth creating strategy. The knowledge that I can raise the rents and raise the occupancy, and I can create 6-figure and 7-figure increases in my net worth by doing those simple operational improvements through my apartment buildings. The fifth and final attribute of the ideal investment is leverage. And that means the ability to buy real estate using other people's money. And of course, that's the name of the game. And of course, it's all about using none of your money, none of your own money. You're going to use other people's money. And that's how you get leverage, using other people's money to acquire significant assets that are giving you income, depreciation, equity buildup, and appreciation. It's a beautiful thing. All 5 attributes are afforded in small apartments. Small apartments is one of the few investment vehicles that actually satisfies all 5 attributes. That's yet one other reason why you need to get started in small apartments.